Hey, hello guys, how's everybody doing? It's been a while. Okay, so let us try to do some sort of recap, some various entries that you actually taken on these previous weeks. And really, I remember it starting from, I think it's here, the gold. Okay, the gold. Fine. So here, I remember talking about the deviator that was actually very dominant. And it was on this, this was the deviator. And also, this was the shift point. Yeah, this was the shift point, marking it by vertical as the shift point. And also that means we must have a shift from the 1 hour time frame for the market to liquidate the daily invalidation point or to come and perform a closure on the invalidation point. So that means coming to the 1 hour time frame, this was the entry that was very challenging to a lot of people. But on the issue of the public, for the public consumption, just try to break it on the normal circumstances that each and everyone should have actually understand. And coming, as you can see here on the 15 minutes time, from the 1 minute time frame, from the 1 hour time frame, I was having a shift here. I can term it as a transition with no formations, but a lot of people have already understand why are we continuing to consider this area. But coming out with the 15 minutes time frame to observe what are we having at the moment in the 15 minutes time frame. Actually, there's this network issue. I don't know if it's already been fixed, but I can see there's difference between the network that we are actually being used to it, but let us try to go on as how we're good. Okay, coming off from this time frame, I'm having a shift here, and also I'm having an announced information, but also clearly terming this as announced information. Sorry. That means I'll also have to wait for the shift from the 3 minutes time frame of the market to come here. But clearly, when you observe the 1 hour, for those who know actually how to handle various areas of liquidity, if you go to the 1 hour time frame, if you go to the 15 minutes time frame, if you go to the 30 to the 4 hours, you know what you'll see on those particular area. So I'm going to the point directly. The entry was taken from the 3 minutes time frame, from the 5 minute time frame liquidity engineering, if not 3 minutes time frame. And I remember it was some sort of liquidity inducement, which was this one. This was the entry point that was taken, actually. Yeah, and later on the market came and tapped into that entry point. And the purpose of this transition from the 1 hour time frame, it has to come to liquidate the price on the daily invalidation point. So that means I would have marked my entry here, which I did, and my risk was only 15 pips. Only 15 pips. Yeah, and the market later on came. Only 15 pips. I never use more than that, regardless of what the structure is actually anticipating, but I never use a risk more than 15 pips. Yeah, so the entry was activated right there. Then the market started to go down. And coming to that means the market has to come down to perform a shift on the daily time frame. That means this was supposed to be my validation point, as I've marked before. But also I'm having this as my shift point. At the same time, I'm having this one as my deviator. And clearly, for those who know how to trade the deviators clearly, in terms of those agglomerations, they know what to do here. But clearly, I took a buy entry on somewhere here on this particular areas, but I won't explain that because that is the different agglomeration that I'm not supposed to talk about on these public issues. Yeah, so the market came inside, And the market also performed a second agglomeration on this deviator here, but this was actually a lot of people are stopped out on this second agglomeration here. I personally did also, the market also stopped me out on this area, but later I continued to wait. After a series of waiting, I remember taking a buy based on the fourth agglomeration in this area, but also after taking the buys, before taking the buys also, you're having another entry based on the second agglomeration. Try to play the price, the network is not, it's not well, it's not good. Okay, so after the market failed on the first attempt from the second agglomeration, the market later on came again, performed a shift here, and left us this formation right here. I also took my entry based on the second agglomeration on this formation right here before taking my entry from the fourth agglomeration. And by marking it, I can mark it by this color. And also coming out to the 15 minutes time frame to observe if I was having any of the liquidity engineerings or liquidity flips. 15 minutes time frame. Here I was having my liquidity flip, which was this one. And my students know what type of liquidity flip is this. So yeah, no more refinement. That is supposed to be on this point here. And the pips from here to here, almost only 11 pips. Only 11 pips. So the market came later on and tapped to this entry. Yeah, the entry was only 11 pips. From here, yeah, to here. 12 is not bad, yeah. 12 pips, because sometimes the market may come to try to liquidate by reacting to the invalidation point. So it's better for you to extend your stop loss 1 or 2 pips below the furthermost deviation. And at the same time, the market on the 1 hour time frame, so you come to observe it on the bigger picture. Come to observe it on the bigger picture on the 1 hour time frame, what was actually happening at the moment. Forgive my network issue. Network is it's not good at all. If you observe clearly, the entry was activated. As we have seen, the market went down on this, the liquidity flip that you actually marked on this point here, and the risk was only 12 pips. But at the same time, the market performed a shift here. And also, from this shift point, I was also having this as my formation, my inside formation. And I usually do this because of one of the behaviors of gold. If you backtest gold a lot, you can notice that gold has a tendency of trying to liquidate each and every area of liquidity before moving on to the next price action. So if you had to trade maybe the second agglomeration on this end, you would have taken a lot of pips here, clearly, a lot of pips. And coming on to the 1 hour time frame to observe, and all of these entries, we're actually taking them based on very precocious way, because selling here is not a good idea because we are inside the daily area of liquidity, but we're actually taking our chances on how to observe these criteria. And the entry that was taken from the selling perspective, it was the entry based on, I need to explain this. Actually, the entry was taken here. But for those who know, they'll just see and they'll know why the entry was taken on this particular area. And yes, so on the 5 minutes time frame, if not 3, we took a sell again from that point to see, because at the same time, as above so below, or as within so without, you are taking the buys entries, but also you are taking the selling entries, trying just to see if the market will try to behave in some specific way, because normally the market has to grab liquidity each and everywhere it goes. So when the market reaches to this point, you just have to observe what the market is trying to do. And before doing anything, you just have to see clearly. This entry was taken based on the fourth agglomeration, but also from another conferences also. But let us try to just to mark on this point here for each and everyone to understand this concept clearly. Yeah. So the market went up and would have taken your selling positions from this point here. Today you are backtesting gold. Okay, so the market came and yeah, only 12 pips as your risk. And mind you, when the market performs any of the shifts, and even if that shift is inappropriate in terms of directional bias, sometimes the market may come to just react to that point, and later on the market will continue with its own movement. So those are things that usually happen when dealing with these liquidity issues. Just try to speed up the simulation because we have a lot to discuss. It's been a while, so we have a a lot of entries to actually break down. Okay. So the market came and the entry was triggered from that point, and the market now went down. So as you can see here, from this point here up to here, almost 340 pips, the market triggered the selling entry, the selling position here, and the take profit was supposed to be on the entry that was taken, that you took the entry here. We are currently holding that trade, almost 1,000 pips right now. And the entry was triggered from the fourth agglomeration that I won't explain it deeper, but clearly from the intraday perspective, you would have traded your movements from this point here to this point here, almost 418 pips. Almost 418 pips. That means we've already performed the liquidation process on this particular point here. That means this now is, we are done with it. So coming on to the 1 hour, because the market is still inside the daily deviator or the daily area of liquidity, and also as long as this entry didn't manage to create a new high, that means you have just taken your pips from here maybe to somewhere there, almost how many pips? Almost 342 something pips here. Yes. So the market now starts to go up after trying to liquidate the areas from the minor areas. That means your take profit now was supposed to be on the place where we had to take the buying entry from this selling position. That means almost 1,381 pips and only 15 pips as well. Yeah. So that means also here we have nothing to offer again. That means we're just waiting for the reclaim, for the market to perform a reclaim on this point right here, the reclaim point. Fine. So after the market now performed a shift again on this point here, that means based on what we call as the second agglomeration, we just have to wait for the market to come to these portions or this area of liquidity right here before going up. At the same time, we're also having a shift here, and also we're having this formation. We're having this formation. So those who have taken your entries again, the selling positions from that point of view to either of these ones as the inside formation. I personally came, that will explain later, but clearly you would have taken this entry from the 15 minutes time frame, but also taken this entry again based on this price action here. A lot of people understand why, a lot of students understand why I would have taken this as the entry point because of something that you're actually seeing at the moment. And coming from the 15 minutes time frame to try to refine this entry here, the entry was taken on this liquidity engineering, the powerful one. A lot of people understand why we term this as the powerful liquidity engineering, and the entry was triggered that way, and the market now went down to liquidate the inside formation that it left from these types of liquidities, from this area of liquidity right here. from that area of liquidity right there. Yep. So as you can see from there to almost 191 pips, not too bad, not too bad at all. And let us try to look at the bigger picture, because the market didn't manage to reach to the specific area of liquidity. But you would have supposed to started taking your partials on the deviator, which is this one. As you can see here, also the market came and tried to react on that deviator. That means if you have traded maybe on each and every perspective of this price, you would have also taken the buying entries on the deviator. That, as we know, the deviators, the purpose or the roles of the deviators is to take the price back to its previous formation to complete the price action. That means the deviator has to take a specific price to a formation before coming or before continuing with another price action. Yeah, so that's it. And after the market performed, let us try to look at the bigger picture on the daily time frame now to see what was happening. I'm trying to backtest gold because gold has made a lot of pips recently. Gold has already done a lot of things. So coming to the bigger picture, we have already performed a shift on the daily, which is this one. It's the daily shift. And that means I am having this one as my inside formation. This one as my, that means I'm waiting now for the shift from the 1 hour time frame to come and liquidate this daily inside formation. Coming to the 1 hour time frame, so far I don't have any shifts so far. So I'm just continuing to play the price to observe if I'm having any of the shifts. And playing the price, let me try to cut it first here. There's things that I need to break down on this particular area. This was the shift point, but also before this becoming a shift point, that means I also have to maybe I must have the shifts from the 15 minutes time frame before the market come to perform that shift point from the 1 hour. And playing the price, the market later on came and performed the shift from the 15 minutes time frame, which was supposed to be this one. And also the market left me with this formation, as you can see here. It was the formation that was actually taken. The earliest entry from the 15 minutes time frame. Yeah, but clearly coming to the 5 or the 3, what we have at the moment. Here, I won't explain it much deeper, but this entry was taken based on the fourth agglomeration, so I won't explain it clearly due to copyright issues. But clearly, when the market performs a shift on the 1 hour, that means you would have taken your entry on the 15 minutes time frame here. And also this entry now came to finish the shift process or the invalidation process on the 1 hour time frame. That means you would have taken the entry there and the market came down to perform a shift on the 1 hour. And at the same time, the market has already performed the shift on the 1 hour. That means we are also having another formation, which is this one, the 1 hour area of liquidity. But I personally took the entry based on 15 minutes time frame, but this entry was also an HPS because, first of all, this was my outside formation. I know I'm going to confuse a lot of people here, but my students understand why I marked this, why I'm supposed to mark this as my outside formation and not this one. And in terms of HPS, for those who know how this HPS works, if you go to the fourth HPS, the FTA criteria, you'll understand what I'm talking about on this particular points. So this was the best of the best entries to take, and I personally I actually used a huge lot size on this area because these are entries that I backtested a lot, and they actually have very greatest accuracy for the entries to be taken. So this was the HPS based on the FTA, the first troubled areas, and this was supposed to be my liquidity engineering entry, and the risk from here to here is almost 25, but I always use 15 pips. Always use 15 pips. Yeah, so from there, 15 pips is actually here, 14.9, approximately 15. And playing the price, the market later on came. And as you can see, the entry was triggered from this, yeah. And now the market starts to go down. Market starts to go down. And the purpose of this shift is to go to liquidate the daily area of liquidity, which we have already seen on this particular year, the insert formation. That means from that perspective, we would have taken the entry based on the 15 minutes time frame, which we have actually, I tried to explain it on this particular year based on the fourth agglomeration here. But also we have taken the entry again based on the 1 hour time frame. For those who know the seventh agglomeration, an art of stocking, you know how to deal with each and everything on this liquidation processes and all that. So that I know that is not something new to you. We have done this a lot of times, and the market continues to repeat itself each and every time, each and every day. So the market now starts to go down, as you can see. Yeah. But also coming out to this, as you can see here, when I mark this formation, a lot of people understand why I mark this formation. A lot of people understand, but clearly, as long as I'm inside this, I'm on this area of liquidity here, and also as long as on the issue of liquidity consumption, a lot of things have already been done. That means the market is not likely to reach to this point. I won't explain liquidity consumption here, but go and backtest this. For those who know the concept of liquidity consumption, go and backtest this. You'll know that on this particular area here, the market is not likely to reach. So I try to mark this because of the reason that you know, personally you know. And also this was supposed to be my area of liquidity for the continuational purposes. And clearly, we took the trade here based on the second agglomeration also. That means on 15 minutes time frame, we are supposed to wait for a shift to happen, which so far no shifts actually happening at the moment. But the shift is supposed to happen on this point right here. So we try to observe and see what's going to happen next. So playing the price, the market on came, performed a shift here. And for those who took the entry was also based on the fourth agglomeration. But clearly, if you know this, I know a lot of people know what I'm talking about on these areas. And coming to the 3 minutes time frame, the entry was taken on these particular areas right here. A lot of people took the entries because a lot of people know the reason why the market cannot reach to the liquidity engineerings in terms of the fourth agglomeration. So I know a lot of people actually understanding. So the entry was taken based on that criteria, and maybe from there, this entry was having very, very minor pips. We'll just try to extend it maybe to 15 to be more precise, and the market is continuing to go up. So as long as you are continuing to hold your buys on this area, as long as you are a trader, you don't have to wait for the market to do anything. You just have to go with the flow. As long as you're continuing to hold your buying trades on these points right here, you're going to continue to deal with each and every price action the market has to make. For example, selling here, for example, buying on these areas right here. So you know how to handle things. So based on the second agglomeration, the market went up, as you can see. And yeah, but also the market reached to the market later on came and approached this particular area of liquidity here, as you can see. And also in terms of liquidity engineering, we are taking an entry based on this particular point here, but nonetheless, the market went up. So the market is continuing to create more highs as we speak. The market is continuing to create more highs. So it's just a matter of waiting to see what's going to happen at the moment. I personally didn't take any of the trades here because I was kind of fixed, but I'm continuing to hold my trades from this point right here. And as you know, gold has to come and perform a reclaim here. So that means from here, from this point here until here, I'm actually 168 pips from my take profit for the trade that I actually posted on my IG from this point here to here, almost 1,535 pips. And we are currently running to 1,353 pips. So we're just waiting for the market to come and perform a reclaim point as long as we have already finished the liquidation process on all of these areas. So that is how gold went down. Yeah. So let us try to also talk about the GBP USD pair. Also, we're having this entry here, the GBP USD entry. I termed it as a deviator because of the what we call, it was a specific time frame from the 30 to the 1 hour, but clearly the entry was taken based on the second agglomeration. On the bigger picture, let's try to observe the clear price action. And a lot of people actually, let me try to illustrate this first. When you do your analysis, always, when you analyze any of the specific pair, whether you are intradaying trade, or whether you are scalping, or whether you are swinging, observe the higher time frames, the monthly time frame and the weekly time frame. Observe these bigger plays first before doing each and everything. So it's very, very important. Don't just rush on the daily, oh, I'm seeing a daily liquidity and all that. No, go observe the bigger picture before doing each and everything. And I've been getting a lot of DMs about people asking me, bro, how do we intraday? As I've said before, I trade each and everything. I am a versatile trader. I can trade intraday, I can scalp, I can swing, whatever. Depends on what the market offers me at the moment. I don't decide. You want to intraday, but the market doesn't give you conditions to intraday. What are you going to do? You just have to wait. So I'm an intraday trader. I'm also a scalper. I'm also a swinger, but it depends on what the market has to offer at the moment. So here we are having a shift from the weekly time frame shift. And also we're having this formation, the two inside formations, this one, but this also the entry was taken based on the conditions the market offered. But also we're having this one, which was the unliquidated one, as you can see here. So the market came, liquidated it, but clearly the entry on what we call as the, wait, before I move on to the weekly, the market came and it tried to change the price action from this point. As you can see, we're also having a bearish shift, which is this one, from this point here. But also we're having this formation. So I marked that entry as the deviator because this formation was supposed to take the price down to that unliquidated inside formation. But the market went down before even coming to this deviator. But also, I expected some sort of reactions, but now the entry was taken confirmatively based on the second agglomeration, which was the non-confirmation of liquidity flow entry. And here we were having this major shift. But before this shift to happen, the market also performed another continuational shift, which was supposed to be on this point here. I mean this one. And also we're having another formation, the inside one formation, as you can see here. We're having both inside. And as I've said before in the previous videos, the behaviors of these particular pairs, some of them, for example, the JPYs may come, try to take some sort of liquidity flips maybe and go away. Later on they come and take some more react with specific liquidity engineering before going down again. So this entry was just a what you call as intraday because we already performed a shift here. And also we are continuing to create these formations here, as you can see. So taking this selling here is not a good idea, but if you need to just trade some sort of reaction, that means you're going to take your trades on this zone and you're going to take your profits on these areas. So this now is your intraday trading. So coming on to the 30 to observe, we just came and just marked the liquidity engineering from the 30 minutes time frame, which was also this one here. And in terms of pips from here to here, only 3 pips were enough. The market came, tapped into the entry, as you remember, tapped into it, and the market went down only 59 pips before continuing to go up. So that was the entry based on this GBP USD pair. And yeah, from there, you've already capitalized enough. So that's how you would have taken your intraday trades based on the GBP USD pair. Personally, this entry, I'm not going to backtest it because as you can see, the entry is clearly second agglomeration. Go use the daily deviator, and I think I've already explained it based on the 1 hour, if not the 15. So go backtest this entry because we're having a shift there, we're having formations, and as you know, the second agglomeration, all of a lot of people actually know it. So go and try to backtest that sheet. Yeah. And also on the issue of this SCF, I know a lot of people actually understanding this. My students know this concept, so it's not meant to be public. So I might pass. The EURUSD entry taken from the 1.606510. Okay, let me try to illustrate this issue. But the issue of EURUSD, if you observe clearly here now, we were having a what? We were having a shift, because this is my highest point, this is supposed to be my shift point, and this is the shift. Clearly from the weekly time frame, also I'm having an inside formation, which is this one. But also, as we know, before the market comes or liquidates the weekly area of liquidity, the market has to perform a shift to the 4 hours time frame. So observing the 4 hours time frame, same things apply. Do you have any shift so far on the 4 hours time frame? Yes, we do. And this was the shift point from the 4 hours time frame. That means I'm having inside formations on this area, but I marked this formation instead of this, and a lot of people know why we do that. So by marking this one, now coming to the 30 minutes time frame for more refinements, this entry was taken based on this liquidity engineering, very, very easiest entry, as you can see here. The entry was taken based on that point, but the entry from the previous week, as you can see here, the risk was only 9 pips. But also after the market also come again later on, performed another continuational shift. The market came and performed it, which was, yeah, this particular point right here. And from this perspective, we're having the formation, the inside formation, which was this one. And this entry now is the entry that was taken from this, the one that I posted it from this, yeah, from this almost 1.06510. Yeah, so it's just a matter of adding entries and more entries, as long as you know the purpose of the marketing, you know how liquidity works. Coming to the 30, we are having this liquidity engineering here from the 30, from this one or this one, whatever. But going further to the 5 minutes time frame, what were we having at the moment? The entry was supposed to be marked on this point right here, but generally from that area. And I want to explain it more further why, because of various issues, but clearly from there, even if you don't know the issues of liquidity engineering and that, or maybe from 30 minutes time frame, if you just came and marked your entry on the basic knowledge of maybe this as a liquidity engineering, or both from here and here, from there to here, almost having only 10 pips as a stop loss. But as long as you know what you do, you just mark this, the entry point. Yep, and later on the market came from there to here. We were almost having how many pips? Only 7.8 pips as a risk. Yep, and the market later on came again. Continue to hold from the previous trades. Just continue to hold, because you know the market has to enter the weekly area of liquidity. So you just continue to hold your trades. Don't let your emotions take advantage of you. Just holding your trades and all that. Just waiting for the market to come. Yep. So I think the liquidity engineering entry was taken based on this particular area here. But the entry, I don't remember how I took the entry based on this area, but clearly from that, but even if also so clearly here, I was having one of the, I don't know if I have to explain this, maybe one of the types or whatever, but yeah. But clearly that was supposed to end, that was the entry that's supposed to be taken from there. I don't know Maybe I misplaced it because I'm taking a lot of entry, so I don't know, maybe I've misplaced that entry. But clearly, after taking this entry, even if you miss this entry, just by marking this from there, because the market has to reach to what? Has to reach to the weekly area of liquidity, which it did. Yeah, as you can see. And based on the fifth agglomeration, you would have taken your entry. I'm not going to explain that clearly, but so far 274 pips from the shift from that particular area and also from there, based on the logic, the normal circumstances of taking the liquidity from that point, the market went up. So that was all about the Euro USD. Okay. This entry was based on the fourth agglomeration. So I won't be able to explain that. This also based on the fourth agglomeration, so I won't be able to explain this one. Same applies fourth agglomeration. This one's just a correlation of that Nasdaq pair. Just a correlation concept based on the fourth agglomeration. So same applies to the Nasdaq one. But this one was based on the deviator. The deviator, as you can see here, was having a shift here. Just this was the deviator. So I would have taken it based on the normal liquidity engineering by just refining it. Let us try to observe it and see. Okay, we are having also the SPX, as I said before. So this was the deviator from this particular point of view. And one of the weaknesses of these pairs, especially the US30, the Nasdaq, and all that, they usually follow the what you call as the liquidity inducement. So coming to the 4 hours time frame, as long as we know how to refine this based on what we know on the issue of consumption here, there's nothing to offer. Coming to the 30 for the entry for the liquidity engineering entry, the entry was taken based on this liquidity engineering right here. And from there to here, only 15 pips, as you can see, 14.8. So that was the first entry that was taken. But even if you didn't take that entry, as long as you know the second agglomeration, you would have also come and take the entry again. As you can see here, we were having a shift here. And on this shift point, I was having an inside formation and also was having an outside formation. And this was supposed to be my outside formation because as you can see, the inside formation was actually liquidated. So by marking this outside formation, coming now to the 30 minutes to do or to refine it clearly, we're also having an entry here based on the liquidity engineering. Yep. Here, so the market later on came, tap into the entry. But even if you miss the first entry, or even if you miss the second entry, you'd have taken the entry based on confirmations by coming to wait for the market to come and tap this liquidity engineering right here. Or even if it's from the lower time frames, just have to wait for the market to come tap into it. And the market now went up. So, and as you know, the market has to come to reclaim. So this was supposed to be your target, this one, but I don't usually mark it as my final target because I know how the market behaves. And clearly after the market taps on those areas, the reclaim points, just have to wait for the market to perform another price action, which is very clear for us to take our trades. So from there to here, only 345 pips. And also from this particular point of view here, from this point to this one, only 22 pips in terms of structure, but we usually use only 15 pips. So that means I will mark my entry on this point here, 268 pips, but the market now continues to create more highs. So that is all about the S&P 500, or the others call it the US500 or whatever. And clearly just try to observe also here, this was how the entries were taken. Okay, what do you have at the moment? I've already explained this gold, how the gold was actually going down. Okay, this also agglomeration 4/7, the CAD JPY entry. So with all due respect, I want to explain this also. This entry was based on the liquidity flip. The best bullish setup are the failed bearish setup. So let us try to discuss this, the USD JPY. So we're having the USD JPY, and clearly, if you observe, this pair is actually bullish in nature by default because this is the dollar. Talking about dollar, this is the dollar. And clearly, coming to the daily time frame, first of all, we are having a shift from the daily, which was this one right here. This was the shift, and also this was the inside formation, the daily one. So I came and see that the market has to come to liquidate this area because of what we know on how the liquidation process actually behave. And this was supposed to be my deviator, this one here. That means this was supposed to take my entry back to what? Back to the inside formation from the daily time frame. That means I'd mark this one. But I went down to the 1 hour time frame and I observed something like this. I always tell you guys, if you observe, you just have to observe areas where price behaved unfavorably. That means those very huge momentum activity areas. And if you observe clearly on the issue of liquidity consumption, that I won't disclose it clearly, go back, test this one, you'll understand why the market didn't manage to enter on this area of liquidity. Because some are maybe talking it maybe on the basic knowledge on the issue of liquidity consumption, we have three results. As I've told the people, the market has to either perform a pure bullish or the market has to go and find what we know is going to find down to that particular area. So I want to explain it more further. But after observing this one now, I came and I marked my liquidity flip, which was supposed to be here. So this was the entry point. And later on, the market came, tapped into it, as you can see. And from there, you are safe. In terms of FMD, you just have to mark this based on the rules of liquidity. You just have to mark this candle right here. Yes. And from there, the entry was activated. It's supposed to be the stop loss. But shout out to one of my students. He also came and take the very, very tactical entry from the selling position from this particular inside formation from the USD JPY pair. And from there, as I said before, we're having this inside formation, the daily one. Coming to the 1 hour, if you observe clearly here, we're also having another huge momentum activity. So it's just a matter of going deeper to find what you're going to find down to these time frames for you to take your entries. And the liquidity engineering he took was from this point here, this point of view. The market later on came. And also it was a raw test because, as you can see, some sort of reactions before the market comes to close below that particular areas. The market came, tap into the entry. Yeah, so he sent it to me, bro, I did this, and I say, oh, that's very, very nice. So people are actually creative. It's just a matter of backtesting and putting into the shadow work, and the market will just continue to grant you a lot. So that was the entry taken based on the USD JPY pair. Just try to observe also. This was the entry based on the HPS, the high probability setup. But I also explained this thing. So, yep. I'm also having another agglomeration here, the fourth one. So this one I won't be able to disclose it clearly, but it's for one of the best entries. Yeah. Okay. The selling entry. Didn't I explain this? Or I did. I did explain these entries. So yeah. So I guess that's all. But thing that maybe you just need to consider when doing your top-down analysis is that it's better for you to observe the bigger picture, because remember each time frame has got its own trend. So it's better for you to observe each and every. For example, when maybe the market behaves like this, let's say maybe this is the monthly time frame. Before you do anything, you just have to observe, because the market follows liquidity, you just have to observe clearly what the market offers at the moment. Because if you observe here from this illustration or from this sketch, I am having a shift here. I'm having a shift on that particular area. So I'm also having a formation here. The outside formation, this one, and also I'm having another area of liquidity, which is this one. That means before you do any top down, you just have to, before you analyze, you just have to observe the bigger picture. That means you just have to observe two things. You have to observe the recent price action, and also you have to observe the previous price action. And observing the recent price action, as you can see here, we are having the what? We are having the daily, we are having the monthly of liquidity at the moment. But also observing the previous price action, we're also having another area of liquidity here. But I won't disclose how to trade these ones, because we just know there must be some conditions for you to take trades based on these ones. But you can take it based on the second agglomeration. You can take that areas based on the second agglomeration. So when you observe something like this on month, that means the main picture you're having at your brain is that you just have to wait for the market to perform a shift on the daily time frame. That means market has to perform a shift or not on the daily time frame for you to go down. That means this pair is bullish, but it doesn't mean that it's going to be bullish forever. The market has to liquidate this formation. But also before even liquidating this, also the market has to come also to liquidate this daily formation again. That means you just have to also to observe the shift from the 1 hour time frame. So you move with the price. So here now, you'll know that when the market maybe approach to this area, I'm going to intraday. You're going to intraday until on this particular area. When the market reaches to this position, you're just going to swing your trades from there down to the what? To the monthly. And from then you're going now to maybe take your position trading. You're going to hold the pair even 3 months, even 4 months. But I usually do that when maybe I'm trading the what you call as the fifth agglomeration. And I recommend you to trade the fifth agglomeration based on the high time from the daily one, the weekly, and also the monthly. But I remember doing it on this pair from the 4 hours time frame when the market performed a shift on the 4 hours time frame. But clearly that's all. And I wish you a very, very tremendous trading week. Yeah, so that's all.